When trading supply and demand, especially in the beginning of trading, one of the most common mistakes that every trader makes is that they try to connect two dots to draw a line as a supply or demand, and then to buy or sell from those lines just to see that the price has gone to that place, hit that stop loss, and then went to exactly the same direction that the trade was taken, just to see that profit target hit but after a stop loss. Especially this happened to me when I begin my trading over and over again, until I know that actually the real trader doesn't draw the lines 2 points but wait for the liquidity. So in this video I'm going to show you exactly how to trade supply and demand like a pro. Exact technique that I will be discussing so that you can use it as soon as you finish this video. Now before I begin this very important lesson, make sure you smash the like button, hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. Okay traders, so you can see on the screen there are two simple diagrams. I'm going to explain. This is exactly what you need to trade supply and demand, and then I'll take you to the chart so that you can program your mind. As soon as you finish this video, you can see those trade in the market. So first of all, let's come to this point here, the first diagram that I have drawn. Now this line I'm representing as a trending line. So imagine that the price started to make a move, created this drop, and then has gone up for a pullback. And once the price finished that pullback, you see that the market will try to break the low again. So this is once the market has broken that level, which is now turning to a very important support level or a demand zone. So once that demand zone is broken, we found new demand zone, and that demand zone turned into the supply area. So this is where the seller will be interested to sell, and then we saw that the market has had another move and created this drop. Now the common mistakes that trader makes is they try to find the swing low just to touch that swing low with a swing high in a downtrending market, and then to sell from here just to see that the market at some point has broken that swing high. Now the most important part here is not to buy or sell directly from a supply and demand area. Why? Because what everyone is doing, you need to do something different. Yes, you need to do something different, because you know that 1 out of 10 trader is profitable. The rest of the 9 is losing money. So if you are doing everything what other doing, then you will be losing money too. So what we need to do here is to wait for the previous, when you are trading supply area, wait for the price to break that previous supply area and the market become overextended in one direction with a huge movement. And that is where is the most important part to look at for the price action. This is a sell zone. When the market breaks the previous supply area, has gone to a new level, and once you see the market has given the price action confirmation that you will be looking at the chart, this is where the sell zone, and that is the trade comes in play in the market. So if you found that on supply area, you'll see the same analogy applied for a demand area, just the other way around. Guys, stick till the end. I will be showing quite a few plenty of examples. This is a very simple concept that you can apply from today in your trading that will change the way you look at the market. Now imagine that in an uptrend, the same thing, the market will create series of higher high and higher low, which is an uptrending market structure. And in that uptrending market structure, what do you see? That the market has come down, has come back below, has broken that swing low. This is the previous demand zone where the buyers are interested to buy. And once the market will break that demand zone, instead of just going from the point to point, drawing a line, what we need is for the price to break that demand zone and then wait for the price to get rejected from the demand zone with an impulse or a price action confirmation for entry. And this is where the entry zone for demand zone, to trade the demand zone. Now let me show you on the chart how it looks like. Guys and girls, take notes and make sure you smash the like button and also hit that subscribe button if you haven't done yet, so that you are not missing out this educational content that I'm posting every day and every week. Okay guys, so this strategy can be applied in any time frame. You can apply in 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, or daily. So let's look at this market. This is Euro JPY. You can trade on gold, Euro dollar, GBP USD, no problem. All of them are same. Now, if you look at this Euro JPY, what do you see? An impulse, a strong breakdown from this structure, followed by we see the market is trending to the downside, creating series of lower high and lower low, which is a downtrending market structure. You see it very well. And then what happened here? Let me draw this level where you can look at. Now, if I draw this level where the most trader like to draw lines, so this is the support here, which is a very important demand area. The price has gone up, the buyers bought from here, has broken that demand area, turned into a supply area, and we saw also a pin bar here, and the market has made a big move from that level with this pin bar. And now what happened, that the price has reached that previous supply area, has broken that completely in a way that the market will revert back from here to create a new higher high. But instead, what we saw, that after breaking that supply area, the market, the candle closed above, immediately has gone back down, and then the market makes it's the biggest move in this impulse. And as you can see that, so those who were trapped, because if you look at this point, this is in fact a very important level, because in the past the same level acted here as a demand zone, now acted here as a supply zone. The price should have come back from that level, and many traders will be trapped in this candle. Either they will go for short from here or will go for long, because there is a bullish engulfer. It's a fake move to the upside just to see that the next one has gone up, candle closed above, just to dodge and then return back. So once the market has done that post breakout, which breaking that important supply area, return back, and you can see that from that level the market didn't look back. And if you trade, if you understand this in the right time, trade it from that level, you can see that how the market will drop easily. It can be traded at least 3-to-1 risk to reward ratio trade available in that area, which easily can be achievable once you know when to trade that supply zone. Now let's look at an example on the demand zone to understand this exactly how to trade supply and demand, so that you can straight away apply this technique in your trading. Okay, let's look at this dollar yen, the same technique that you can apply trading the demand. Now look at this one here. This is the dollar yen trending down, and finally it changed its momentum from here. It changed its momentum from here. You can see it formed a double bottom, and the market has gone back up, has broken that outside, created a new uptrending market structure. If I separate this structure, you can see how it did. Let me bring that up, and you can see it's a perfectly defined uptrending market structure. Double bottom breakout, and then forming series of higher high and higher low, which is an uptrending market structure. Now what happened after that? Let me bring that up again here and to see how the market did. Now from there, you can see one move to the downside, and then the market didn't look back, has made this huge move. And let me bring that up again so you understand it clearly. Now look at this one here. And look at this one here. What do you see that? So far, the market is maintaining series of higher low and higher high. Finally, it managed to break that level, which is the supply zone here, which is the demand zone here. And the price has just broken the demand zone, even more extended. And then after a new bottom came up, confirming that false breakdown, market just got back. And look at this. After that, what happened? The market made a huge move to the upside, creating this big move. You can easily trade 5 to 1 makes 1 ratio for this kind of move. And when you find it, when you can spot it in the right time, in the right direction. So this is the simplest way to create the supply and demand zone. Now let me show you. Let me show you another example that will strengthen your understanding of trading supply and demand zone from the right place, in the right time. Okay, so this is another great example to look at on euro dollar. If you look at euro dollar, what do you see? That this is a very strong impulse to the upside. Yet the most important part is to look at which way the major direction of the trend. Now you can see that with this impulse, the market has created this move, and then quite a few candles created this demand zone, and then the price has broken that high. What happened? Look at this here. After consolidation, finally, whenever the market coming to the previous demand zone, this is the previous demand zone here. It is just dropping down a little bit, grabbing the liquidity and then back up. And you saw that it has done the same thing here. It has crossed the previous one low, has gone back up, and again finally it made this move with this long, huge pin bar. Look at this one here. This pin bar has penetrated all this low. So this is the previous demand zone where the traders would like to draw a line, connecting the two dots to get completely stopped out. Just to see that from that zone, the market made a big move to the upside. And it just made a huge move. If you trade this, it's a big trading candle. And this is the best way to trade supply and demand zone after break of that previous supply and demand, and wait for the price to move back up to its original direction of the trend to find an entry from a very important area of value. I believe that, guys and girls, you enjoyed this very important lesson. If you don't understand it, then I would recommend you to watch a couple of times. And any question, leave a comment below to let me know. And if you want to learn more, also learn the strategy that I am trading currently, you can join us today. Also, the link you will find below this video in the description area. Visit the website and also join me to learn the strategy. And if you enjoy this analysis, make sure that you give a big thumbs up and also subscribe to the channel if you haven't done yet. Press that bell notification so that you are not missing out any of the content that I'm posting every day. In addition to that, there is a giveaway in Forex Trading Wizard Academy. There was a 80% off to join, lifetime access where you can access all the trading tools, all the strategies that I am trading. And also you can see all the trade that I am opening in Forex Trading Wizard Academy. I have given that coupon below this video in the description area. You can use that to join today, which is ending today, to join us to be part of Forex Trading Wizard Academy. Thank you, and I'll see you there. Until then, stay well, stay happy.